Hey, Ibra. Nice to have you in the pod. How are you, man?
Thank you for having me, actually. I'm doing quite wonderful. What about you?
Pretty good. It has been a while that we haven't met, huh?
I know it's been over, 6 years now?
Something like that, dude. Something like that. Hey, I was very excited when you were telling me that you wanted to learn about finances. You're not the first one that is asking me this type of questions, and I think you know what? Maybe this type of combo I need to record it, so that way if somebody else is asking me the same thing, I can refer to this video. So I did a little presentation though, but before we jump into the presentation, tell the audience a little bit of yourself. What do you do, and what you're looking with this session.
Okay, so full disclosure, the name is Ibrahim, aka you can call me Abe or Ibrahim. It is the same. As for what I do, I am a software engineer for the company that I work for. Just know that they are a contractor with the government, so cannot really disclose much about it. As for finances, I believe it's something that it's not a belief. It's more like something that I know that in order to get an upper hand towards the future, you truly need to know how you are going to disperse your finances. Otherwise, you're going to find yourself old and not have anything to live if on by. Let alone if you're married with a wife to take care of and kids. So being financially literate is something that I believe every man should know, including our women as well. So
Yeah,
that's why we're
I,
here for that lesson.
it hit me for me maybe in 2015. My dad, uh, he he lost his job, and it's like that realized me. It's like, man, he's in his 60s now, and he still has to work, right? So, and for me that kind of hit me like, oh, I need to start looking for my retirement, because before it's like, hey, I'm young, whatever, and like doesn't matter. But then kind of in your 30s, that's when you start looking into, okay, I need to be able
Exactly.
to figure out the retirement, and I have some rentals investments there. So, but again, I didn't pay too much attention. So I think that maybe it's almost 10 years. So I think that you're in a perfect time in your life to be able to make sure that you are allocating and using your finances. So I let me jump into a little bit of the kind of the presentation. Let me know if you can see kind of the slides. So I wanted
Yeah,
to.
it is very small for
Okay,
now.
it's okay. I'll be very descriptive with you, but basically, kind of the first slide says here that I'm gonna tell you the different ways how we can turn 100K into a million. Look, I didn't know how much you had saved, so I just basically was thinking, maybe in your 30s, the majority of the people uh, they're about there. Feel free to disclose or not, right? So this type of things are personal. But yeah, once again, this is not a financial advisor. I'm not an advisor. I'm just a dude.
Full
In,
disclosure.
I'm just a dude in the internet, and as well your friend, right? This is just a casual conversation. And by the way, it's not
Mhm.
five things here. Actually, it's three things. Okay, so my name is Mando. People know me by Mando. You know me by Eric. So that's kind of what it is. All right. So I wanted to go into kind of the first point, and a lot of
Mhm.
people tell you a stock market, right? But even before we jump into this, I want to make sure that you are kind of already understanding some concepts, because we're going to build very quickly on top of these concepts. Tell me
Mhm.
from your opinion, what is for you money? Like out of the cuff, right? What do you understand? What your family or your like when you were growing up, what did money meant to you?
Okay, so I grew up. Well, you and I share the same culture, where actually being macho means you gotta provide for everybody. So you are literally the one who pays for everything, take care of everyone. So, and I see that it works. It was working back in the day where actually we didn't have this much inflation, but now it doesn't work anymore due to the fact that just everything has become more expensive. So growing up, yeah, that's what money. That's what the that's what our money means to to me, because that's what I was seeing. My father
Mm-hmm.
taking care of everything. Now, now in my generation, now for example, my father's getting older. He's not going to be able to keep up with
Yeah.
the same thing that he has. Just like you said, your dad is 60 and he has to work. My dad is 60 now and he's still working. So that also hit me as well. So I started looking into it, and that's when I came across the term of what is actually rich and what is wealth. Because they say a rich man, like for example, like me, I can go get, for example, a $400,000 car via credit and be able to make the payments. But the problem is that's the decision of a rich man. The thing is, it's a depreciating value, and like you're gonna lose a lot of money if you
Mm-hmm.
keep doing that. And plus, let alone you haven't invented the insurance and everything else that comes with you. So that's not money to me. To me, having money is doing what you want to do and having the freedom to do what you want to do without seeing any consequences whatsoever. So
Mm-hmm.
technically, like the world becomes like your playground,
Yeah.
except we will not be playing, like we will be doing responsible things. For
So
example, I want to be able to take care of my parents. I want to be able to take care of my family, myself included, and my grandkids after their grandkids and their grandkids. To me, that's money. That's true wealth to me.
so for you, it's like freedom. That's what it means to you.
Oh yeah, absolutely.
Okay. And there is not a right and wrong answer. It's just sometimes it helps you to figure out different perspectives. Before, for me, it meant to be a tool. I can employ this money and I can just deploy it to do something that I want, right? And as well, for me as well, freedom is one of those. And it could mean a lot of things, right? For all of us. But lately, I have been thinking about money as an amplifier and as well energy. Why? Because if you're a jerk, with money you're gonna be a
Okay.
bigger jerk, right? So I really think that
Oh, that's true. No, that is very true.
yes. So I think that it's crucial to figure out kind of like how it amplifies you, right? I feel that if people that they are nice and kind and they have money, they'll do nice things, right? Because that's who they are. And the other second part that I was mentioning is about kind of energy. And I think that is energy of attention because if you think about it right now, we are focusing on this topic. So we are spending this time, and it's very likely as we are thinking to come up with ideas. So in that way, we will be able to make money, right? With this podcast that we are doing, like this recording, is going to get attention, and those attentions translate into advertising, and it translates into money. So lately, I have been thinking more than maybe money is energy. That transfer from one attention to another one that gives the value. So the part that I wanted to stress here is the value, because sometimes things don't look like they have value. Like who told us that gold it was the actually had any value? It was just perspective, right? It was just literally people saying that they it just was valuable, right? So I think that we understood that one, but it's important sometimes to explain it because people they just think that is kind of like cash. And the interesting here is that let me just actually make a diagram for you. So let me see if you can see here. Who do you know that actually issues the money? Like in the case of the U.S. dollar, right? So you have a U.S. dollar here. Who do you think that is issuing this dollar? Yes. And there are only a couple things that the Federal Reserve has kind of in their arsenal to be able to regulate the different things. So, what do you think that if they can do this, they actually can print? They can print money, right? What is the other thing? They have like two levers. What is the second lever that the Federal Reserve has? Yes. So that's the reason why it was interesting for us to discuss about value, because the reason why uh, when they are printing they still hit value is the confidence on the country. And the confidence on the country in some point in the 1960s, it was backed by gold. So there literally was a bunch of gold, right, like in Fort Knox. Uh, and but right now it's just a promise. It's a promise that the people of United States, they are going to produce a GDP, and they can back it up this printing. If not, it's just paper. It's like this literally this bond that I'm using. It should be almost as similar as a dollar, but the difference is that attention and um, that promise that the American people will repay that. So that's the reason why they are kind of are able to print that. But the second variable, it is interest rates. So interest rates allow to kind of the federal, and they are very important for the stock market. So that's the reason why I'm touching it, because uh, let's make a um, coming back here. If uh, let's say that you want to buy a house, will you buy a house when the interest rates are 20%?
Absolutely not.
It's very hard, and sometimes you might have different situation in your life, right? That is like, oh shit, I need to pay that, because in some countries they do it. Some countries like Mexico, they are 12 13%. So, but that's their life. That's how much they have to pay, right? Or then if you go to Europe, it's like maybe 1 or 2%, right? So, pretty cheap. And now in US, that's the price that it fluctuates. So right now, as we are recording, it's about 5 6%, depending of the bank and depending of your credit score. But basically, interest rates are the tool that allows the Fed to be able to regulate. Why do you think that this is important?
Because interest rate, as far as I know, is
Is
one
one
way
way
for
for
them
them
to,
to
well, keep
keep
the
the
money
money
circulating
circulating
and
and
also
also
at
at
the
the
same
same
time
time
take
take
some
some
for
for
themselves.
themselves.
So okay,
Okay,
hey,
hey,
we
we
all
all
understand
understand
that
that
economy
economy
uses,
uses
like the
like the
paper
paper
currency,
currency,
but
but
it
it
has
has
to
to
circulate
circulate
from
from
one
one
person's
person's
donut
donut
all
all
the
the
way
way
back
back
to
to
key
key
in
in
order
order
to
to
provide
provide
value.
value.
Otherwise, if
If
you
you
just
just
leave
leave
the
the
Federal
Federal
Reserve
Reserve
and
and
then
then
leave
leave
like the
like the
country,
country,
we're
we're
gonna
gonna
have
have
a
a
surplus,
surplus,
aka
aka
inflation
inflation
of US
US
dollars,
dollars,
which
which
will
will
reduces
reduces
like the
like the
value
value
to
to
it.
it.
So
So
interest
interest
rates
rates
allow
allow
them
them
to
to
make
make
sure
sure
that
that
we,
we,
control
control
the
the
value of
value
the
of the
dollar
dollar
and
and
also
also
what
what
will
will
come
come
back
back
to
to
them,
them,
as
as
well
well
as
as
You cannot hit it there. The main point is to be able to control inflation. So as the prices of things like houses and basically commodities, right? Your house, your expenses, your bills, they start going up. They wanted to control how high it is in a certain rate. Each country, you can see their GDP, and they will be able to tell you kind of how much is the growth that they're expecting. Like in some case, maybe China was growing like 9%, 10%, and so on, right? So different countries, and this will allow them to not grow too fast because the prices will be almost like unreachable. We just saw it happen in 2020, right? When the pandemic happened, basically all the prices for everything kind of double. So the Fed had to intervene and basically first lower it and then raise it because it was trying to control, because at the end of the day it's like a balloon, then it's gonna pop, right? So the Fed is allowing us to control that. So going back to kind of the presentation here, these variables are crucial to be able to understand them, and there is, depending of the type of person. For me, I like math. I like to see things in a very logical way, but I'm not saying that this is the best way, right? Each person can choose their way of seeing the market, but one way is to understanding these variables. So in that way, you can understand the different cycle where you are, and we'll discover we will talk about the cycles in a couple more slides. But yeah, these are crucial variables to try to understand. So this is a good question for you, Ibra. So if let's say that right now you are in US, but let's say that you move to back to Africa, any country, right? What how do you know that it's a good interest rate and the yield that you are getting for your investment? How do you know that is good? Like,
Okay, it depends on basically what I get back from it. For
mm,
example, or the way that I see it is, for example, let's say that I move back home, and to buy a house because we were using a house as an example. Let's say that okay, here's the house. It will cost, for example, let's say 75,000 American dollars, and with 20%, uh, well, I wouldn't say 20%, let's just say 5% interest rate. And since actually I've been following like the market, let's say back home, the same house was being sold at some point like 5 years ago for 55,000 with an interest of 1%. So it would have been better for me to buy it at that moment, like back
but you
then.
can, right? I mean, obviously you cannot go back. So I
Yeah.
think that the interesting thing is to be able to compare investments, and we'll cover some of the things. But I want you to understand that there are ways for you to see a benchmark on based on the interest rates. So remember that the interest rates, if we go back to the presentation, the banks are creating the interest rates, the Fed. So if the government, do you understand um, the relation between bonds and stocks? I can explain it to you.
Yeah. Yeah, I believe so, but it might not be quite clear.
That's
Just
fine.
for the sake of
Yeah.
this, so please explain it again.
So you have almost in they call it the modern portfolio, and let me just put my here. So they used to tell you that almost the number of years that you are, let's say that if you are, how old are you? 30, 33, 30 something, 35. Okay, that means that almost if you will divide your money, your net worth, about 35%, you're supposed to put it on basically on bonds, and then depending how aggressive, some people actually invert it. Some people, and this is stocks. Some people say, hey, no, I want to be super safe. I want to invert it. I want to only have the risk on 35% and the majority on bonds. And the reason why they did that is because kind of the bonds are uh, kind of the safe havens. That's how they used to call them. And the reason why they used to call them like that is because it was the same promise that we were talking about. If we go back to the this thing about the printing money, right? The Fed printing money. Uh, Basically, that's what it meant, that you would be able to get about maybe 3 to 4% in that time. Very almost secure. Nothing is secure for sure, but it's in a very high chances that you will get paid that a year. So that means that you have a percentage, in average percentage, I don't know, maybe 3% here, and the average percentage of stocks is about maybe, I don't know, kind of like between 8 to 10%. Then you will be able to kind of navigate the in your portfolio. It will kind of move like very stable, right? So um, like the word of bond is because what the government is issuing paper, and that's literally why they call it the bond, because they are selling treasury notes. It's like the promise to be able to pay you an interest rate at certain time, which they call it maturity. So there are terms between next month, 3 months, 6 months, 5 years, and etc. You actually can go to treasuries, ustreasuries.com, I believe, or treasuries.direct.com, and then you can buy directly there, or you can use your own broker and buy them. So there is one way. So that's kind of the easiest way to see if an investment like in that country, that's your baseline. If the country is issuing bonds, like treasury bonds, which is a promise that they will repay you for any investor, then you can say, okay, maybe the investment that you need to look into that country, it has to be kind of at least that. If not, just put your money there in the bonds of that country, right? For the case of US, right now you can get a CD, and it's maybe close to or a high yield savings account, which is maybe between 4% to 5%, and you don't have to do nothing, right? You just park your cash there and just put it there. I'm not saying that is the best thing, but it's better than just keep it in the bank, because sometimes the bank gives you like nothing. So,
Yeah.
um, and sometimes you are losing every month that you are keeping your money, and sometimes it's like there is this guy. Do you know Ray Dalio?
No, I have not heard of him
Ray,
yet.
Ray Dalio is basically one of the gurus or the Steve Jobs of finance, and the guy said that cash is trash, because what and he was just like he went viral because a lot of people they like, what the heck, why this guy is saying that cash is trash, right? And the reason why is because it loses its value across time. It's just losing the value. So that will actually give you what we're talking about is this last point, where you will be able to know your return of investment. So depending on the inflation of that country, depending of the interest and the yield that it has as well, you are all if you already have some cash, you will be able to start making money there. So now, an interesting question here is, everybody kind of wants a million, right? So let's just hypothetically say that you have 100K here. Let me just put again this thing here. So let's say that you started with 100K, like you already saved all these years 100K, and let's say right now you are in 35 year, right? And then maybe in some point, obviously, if you want to shorten this, but in some point maybe at 60 something, you want to be able to have a million, right? So now, if we think about it, let's say that a person, a techie, how much a techie is making in average? You don't have to tell us your salary, but in average, how much do you think that they're making? Let's put 200, right? That's an average, maybe 150, 200. All right. So and for those 200, 200K a year, yeah, it is in the higher side. But what I wanted to illustrate is how much do you think that the regular people are saving? Tell me a percentage from this amount. How much percentage do you think that they are saving? I feel I feel that is high though. That's about your almost 30%, which I don't think that they are. I think the majority of the people are, if they are good, we can see statistics, but I think that maybe it's 10%. That means that it's 20K uh, a year. So now, if we divide that, um, it's just insane though. Like if we divide this like 900,000 um, divided by the $20,000, uh, it's 44 years though. So until you are 75, you will have, so you literally, it's like, which is like, wow, you are saving 10%, and in 45 years you get to that amount, right? So now let's even see the numbers. Like you were thinking that maybe they're saving 60K. So that would be even 15 years. Like in 15 years, saving 30%. So now with these numbers, I think that we will be able to kind of try to see as a benchmark how the next part of the session, we need to think how we can reduce this amount, right? So instead of getting you, because you will get it there, just having any of the just even saving money, right, and making sure that you can work all of these years, you'll get there. But the idea is how we can shorten it less than 15 years. So how that sounds? Sounds good.
Oh, oh yeah, always is amazing. That's the whole goal.
All right. So let me just let's go back here. All right. So now I think that there are a couple things we discover the bonds, right? So there are loans that are given by the government, as well. There are bonds for companies. There are companies like MicroStrategy. They issue bonds for them to be able to get Bitcoin. So again, but usually, if you want more safer bonds, they are issued by the government. So another internal interesting thing is called the McDonald Index. It's basically an informal way to see kind of inflation and how the power of currencies. So in that way, you start seeing the relationship between maybe the euro or the dollar. For us, that we were born in other countries, it's very normal for us to change the currencies into dollars because we are used to, right? But sometimes people that they live here in America, is everything always in dollars. So, but it gives you a good idea, kind of how currencies are among other ones. Uh, have you heard about the risk reward ratio?
Risk and reward, yeah. Some people say the high risk, high reward, especially when it comes to the stock market, but that's not quite always the case. So
All right. So then, when we are investing, um, there is this relationship between how much money you need to put down in order to make it, right? So I personally like to double my money, which means that basically, if I wanna put X amount of money, I want to have the the double of that money. So it sounds obvious, but let's start playing with different examples. So we can see different investments. So imagine that you have a house. So just your typical house in kind of in Texas. How much do you think that is a house in Texas? 250. All right, all right. So then let's say that is your first house. How much you will have to put down as a down payment? Yes, that is actually the PMI insurance. So if you don't have more than that, the banks require you to be able to. If not, you're gonna have to get this insurance, and it's pricey. So I agree. If you are able to have that, so that means uh, how much money you have to put here. You have to put about 50K in order to be able to have that. So this is a great example how let's think how we will be able to have how we can double our money with this though. I want to I don't want to put you in the spot, but we are kind of are. So let's think about this. What type of deal you need to look in order for you to double your money? So tell me the difference, and I help you here, but I want you to think a little bit. Yes. So basically, yes, but not really though. You actually hit one of the scenarios, right? So the scenario that you are describing is like instead of if we want a house that the value is 250, and if we want to double our money, that means that we want to make sure that we are getting a house that has a nice discount. So if a house has maybe 50% discount, and you're gonna say, why will have 50% discount? Well, that's because it's pretty bad shape, right? Like maybe it needs a roof, maybe it has foundation issues, maybe it's like all destroyed, right? So that way, or even burned down. So then in that way, it's 125K. And then if you only put the 20% of that, let's say that just to make the numbers even 100K, right? You only have to put down 20K. But you're going to say, well, the bank is not going to lend me money. Oh, but there are other type of loans. You can actually, you can have a line of credit. You can have, even in your credit card, this is not much amount of money, right? You might be able to even get it in a credit card. You might be able to get another type of loan, like a hard money loan, right? So there's some people that they have cash, and it's like, hey, I'm gonna lend you this money for 6 months for 10%. That's a very normal way, right? So there are many ways for you to get the cash. But then the numbers, look at how the numbers are interesting because you are putting only 20K. So, and then when you fix it, let's say that you have to put maybe 20% of that. So now you're having fixes, you have 20K, I'm sorry, 20 plus 20K, plus you have here another 50K maybe to repair, right? So in total is going to put you in 170. Let's even raise this amount. Let's say, well, it's too much. Sure, we our budget in order for us to double it, then it could go up to 220, right? Obviously, you still have to pay realtor fees and all of that. But do you see, you can adjust your numbers in order for you to double your investment, and that's kind of where I want you to start thinking how you are able to keep doubling your cash. I There is a rule though. Have you heard about the rule of the 72? The rule. Oops. Yeah. So one way to keep measuring how good of an investor you are is to be able to know against the different investments. So we mentioned that the stock market gives you about 10% a year in average, right? Depending of if it's a good year or a bad year. So uh, and basically that means that the rule of 72 says that if you divide 72 by the interest rate a year, that will be 7.2. This is in years. So what this is telling you that in 7.2 years you'll double your money in a 10% interest rate. So this allows you very quickly to see the type of investments, right? Because once again, if we want to go back to reduce the amount of 15 years, you're gonna have to make bets to be able uh, to kind of shorten that time, right? So and it's like almost like poker, right? In poker, it's just you might say, well, it's a gambling game, yeah, but you there's a many ways that you actually can learn from those people without and I feel that is you are betting. And people say, well, I don't bet. I mean, even going to a job and deciding to be in that job is like you're betting on that job, on that company. Pretty sure it's like maybe a game of words, right? So, but going back to here is 7.2 years. Obviously, if you start increasing this to 20%, then you divide it, and then it's 3 years, and so on, right? You keep decreasing the amount of depending of the interest. So this is very helpful to be able to see how to accelerate the doubling. Um, uh, and why you think that people kind of want to double their money? Sounds obvious, but I don't think that is obvious. Why you think that is? They're always looking for that, the rich people.
Yeah, because it's a way to always accumulate assets. Well, we're talking about cash right now, but cash, just like you said, it's energy that you could use to, either produce some more, or just if you don't use it, you lose it due to inflation. But yeah, rich people like to double their money because it like shortens the path to whatever their goal or their financial goal is in this case.
Yep. Yeah, for sure. And I think that as I'm explaining you this, I like to always mention this chart because always remember. Have you seen this chart before? Is the Donald Kroger effect? Have you seen it?
No, no.
So basically, when people is learning a topic, right? The in the beginning is like, oh yeah, I know all of this. Heck yeah, like and then you hit this peak. Is they call it the mount of stupidity. so so then it suddenly is like, oh shit, you start learning more, but then you start realizing, oh crap, I don't know anything. Then you go back to the value of despair. It's like it's useless to know about finance. It's so much, and I don't know anything, right? That's basically after you start spending some time, and then suddenly slowing down and all of that. You keep learning right through the time, and then it's like, okay, I can see it. I'm understanding better some of the concepts before, maybe what Mando, whatever he said, that maybe it's not
Mhm.
making sense, right? Whatever, and then suddenly you have this plateau. It's like, okay, I'm there. So it's basically a combination between knowledge and experience, but it's important to kind of remember that. So we were talking about kind of a poker strategies, right? And again, it's not about gambling; it's about learning some of the things that they are pretty good at. Did you knew that a poker player they have to make 500 decisions when they are sitting down? Because every time that they are getting their cards, and there is a book, by the way, I think that is called Thinking in Bets, which I highly recommend because it allows you to start thinking in a different way. So assessing the risk and making decisions very quickly. And that's what they're trained. They're just trained to be able to make decisions in a split of a second. So kind of like allowing you to assess the risk on kind of these different investments when you are seeing it. The other one is your bankroll, dude. I feel that going back to this, I feel that all we are all can be talking about money and like different investments, but I really think that is a trifecta. So if I divide this, it's basically just think that this circle is it is even, but I feel that the one chunk is your psychology. The other chunk is your money management, and the other one is your strategy. So we are hitting with this presentation different things, right? We are hitting like, okay, how you are perceiving money. We need to figure out your money management, like what is an optimal um bet size. So, uh, and this one is an interesting question for you. So, if I ask you how much would you be okay if you lose, I don't know, 100K in one bet?
No,
All right.
because I don't like losing.
10K.
Yeah,
All right.
it's just a bad day.
Okay. So that means that just by asking this question, that means that your bet size it should not be more than 10K. So any investment that you're going to, and that's a personal thing, by the way, right? So people know their thresholds based on that question. So always ask that question, and that will change. Right now, that's the value, right? Like that's the size of your bets. Um, and actually, it's not bad. It's actually a decent amount. But there are some people that actually they don't even want to lose $1,000, right? Obviously, nobody wants to lose, but it's in order to be able to know, because some investments just go to zero, right? Like right now we know about Bitcoin, but guess what? 15 years ago that thing could just go to zero, right? And I still can go to zero. So but that's where you have to realize, okay, how much money you want to invest. So um going back to the diagram, that's what we're trying to figure out. So for in your case, my recommendation will be to just follow your intuition, and at the moment, kind of don't make more investments higher than that, or trying to figure out how you can mitigate your risk, right? So the other one is we'll try to figure out different strategies as we are talking. for you, and you have to always keep in check the psychology, because if when you are losing, let's say that you are investing in the stock market, when you are losing, like, man, you want to sell, right? And you truly only lose when you are kind of selling, because you are liquidating. And I sometimes I see so many times that they get into an investment, just let's say Bitcoin or Nasdaq or whatever, and they just see these dips of 20%. And let's say that the same person that we're talking about 100K, and they see a dip on 20%, they already lost 20,000 and they get out. It's like, wow, like, but again, you have to be able to fully understand your strategy, which that's key to be able to keep you all intact with your psychology and your money management. So uh, let's go back here. So that's what this kind of mean on your money management and your bankroll. So now let's start talking about a little bit of the stock market. So are you familiar with the bulls and the bears?
Yeah,
Yeah,
I
I
Okay.
am.
am.
For the audience that they don't know, if you go to New York, there is a statue of a bull. And basically, what it represents is just kind of the capitalism and basically anything just buying and anything going higher. And then you have people that is like they are less optimistic and they say, no, no, no. It's like the market is not going to go that high. And basically, kind of the bears, right? Because of the movement, the one is pushing and the other one is pulling. And I feel that is kind of the dynamic of the market in a healthy way. But this chart is an interesting chart because it shows you how the different bull markets, the blue ones, it shows you kind of how much they are growing, and and the and the red ones, or kind of orangey, kind of the bear markets. Sometimes it might have a drawdown of to 50% down. So that's the reason why people have to make sure that they are controlling that risk, because your investment can go in some cases uh, up to minus 50%, right? People ask me what do I do, right? Like myself, myself is like very simple though. Like I just use Nasdaq, and if I want to leverage, I I basically use TQQ, or sometimes I just use options to be able to leverage. But before we move there, I wanted to maybe chat a little bit about that. So, um, from your perspective, explain me what do you understand for leverage?
Leverage is basically just using information in order to be able to read the market and be able to make smart decisions so that you can end up on the black if we are, you know, like on the black. Because as I say, information is power. The more that you know, the better decisions that you could make. Or going back to the trifecta, if you if you understand what's going on, you will be able to develop a strategy that will keep your psychology in check and give you a better money and your management. But if you don't do any psychology, I mean, if you don't do any research, you won't be able to develop a strategy, which could mess up your psychology if you just throw money in there and tell you that you're bad at managing money.
Mhm.
That's what I'm thinking.
So there is this guy called Naval Ravikant, and he said that there is he mentioned that there are multiple type of leverage. You have leverage of capital, which is basically we understand it as the one that you describe, right? Like you get more money from the bank or from somebody else. It allows you to leverage. There is another leverage of code. When you're coding something, you're able to replicate and you're able to scale. Then you also have the leverage of advertising. So if you go into Google Ads or Facebook Ads and you have a product, you can leverage it. So you can all of those you can employ it to be able to make money. So in the example, we already kind of understanding that because we kind of do it already. So in the same example that we have of the house, we said that we will have about 20%, right? We are leveraging already. Yeah. So this is already, if you notice, we are already leveraging 1 to 5. So what it means is that we are grabbing one chunk, which is 20% of all of them. So we are literally leveraging. This is your leverage. So the bank is giving you the money to be able to buy this house, only putting one, like in these chunks, like a one of five, which is 20%. So it's very important that you are able to do these kind of numbers quickly in your mind almost. So in that way you know, okay, how much I am leveraging. So if you start looking into options, this is crucial, right? Because you know how many uh, stocks you're gonna be able to have for many contracts, and then you start doing the calculations and so on. So, but yeah, this is kind of what I was referring with leverage. Right now, the leverage for this transaction is 1 to 5, which is not bad at all. I mean, we are leveraging 5 times. So if I want to leverage with the stock market, I can do it in many ways. I can actually get, maybe talking about Nasdaq, I can get TQQ, like if you go to your broker, Robinhood or Interactive Brokers or TD Ameritrade, whatever, um, you can start looking for the symbol TQQ, and this follows uh, the Nasdaq. So if let me see if I can see it in this one, which is TQQ price, and let me just put this. So look at the last year and TQQ price, and look at the percentage that it did, right? Like right now, this is if you put 1 year, the last year, the percentage is 76%. So that means that if you had 100K and you had the guts to be able to put all in one transaction, right, um, into TQQ. Again, this is not financial advice, but this is just different strategies, right? So that means that you will now have 176,000, right? So, and without doing anything, basically, right? Just leaving your money there and just growing. So I actually in 2020 I was liquid because I sold some stocks of the company that I was working, and I was able to capitulate. For me, I got it almost a little bit lower. It was about $17, and I was able to just recapitulate a good chunk. And again, you have to weather it, right? You have to weather it. I sold some here before the peak, but again, I kept a good chunk too, and then I saw it losing, right? But my strategy was like, well, technology is always gonna go up. That's my own thinking, right? That's my own way of abstracting this. So, and yeah, the 2022 was raw for me, right? Like, because my investment is like crap, right? But again, I didn't sell. I didn't panic. I was just continue actually to DCA to buy even more, right? So then, and again, I took it. So for me, I have probably my average is about I don't know, 17 $18 per share. So, and I already kind of made a nice return there, right? I'm sharing this in order for you to see that you sometimes lose, but you just need to make sure that you go back to the what we are discussing, right? On your uh, if you going back and have your psychology in check, you have your strategy and your money management, you should be fine. So, questions so far?
Very clear.
So, uh, now there are different ways, right? Because the other one, as we were discussing the different points, we discussed about the stock market. The other thing is very obvious, right? It's like doing businesses. Uh, you have to think, okay, do you want to do it in a more, I don't want to say passive, but in a way that maybe you start parking cash, you can just do it through the stock market, or you can actually start looking into maybe building a business. And because you're a techie, maybe you can start looking into a SaaS, right? Exploring a SaaS, or maybe you can start exploring a service that I don't know. Some people say, you know what, I can start doing because I like anime, and maybe I can just create customs for people for Halloween, right? Like some shit like that. So you start thinking on something that it will generate value, so that way it will attract the money. Or maybe a shop. Maybe you say, you know what, I want to get some things from or whatever from China, whatever, and then you start reselling them in Amazon.
Japan.
So and again, this will allow you to kind of do other kind of side hustle, right? So I have to mention it because people kind of like to do it. So have you seen the chart? This is basically this chart is very funny though because it's about the stock market and it's very difficult. This chart is actually Isaac Newton investing on the stock market. So and it's funny though because in 1721 Newton invested a bit here in the beginning of the bubble. Then Isaac Newton exit very happy. He made some good money here. It's like, okay, yeah, I made some good money. But because everybody kind of respected Isaac Newton and he was saying that he was in the stock market, a lot of his friends, they start going into the stock market. And guess what? They stay there. And they just literally capitulated. So then Isaac Newton, because he saw that they were getting rich, like, let me get back into the market, right?
Oh,
So
that's powerful.
then he got into the top of the market, right? And guess what? It was almost the top of the bubble. Then boom, right? It got busted. So then Isaac Newton exit and all broke. So the reason why I'm sharing this is because it happens, right? So that's the reason why your sizes of your bets, you have to keep them on check because you don't want if it happened to Isaac Newton, which is one of the greatest minds of humanity, could happen to any of us.
Yeah.
Yeah. So uh, going back to the business acquisition, the other thing that you can do is instead of opening from scratch, you can basically buy a business that is already running, right? And there are many ways to do it too. You can buy it even without putting any money, right? If maybe let's say that you have a relative or you know a friend and they are trying to get rid of that business, you take it over, and it happens. I have seen people doing this. So do your research, right? There is websites like Biz by Sell, LoopNet to be able to find opportunities. Obviously, evaluate these things. Let me know if you are looking for something that can help you to figure out if they're good or bad. Always negotiate, right? Everything is
Yeah.
negotiable.
Oh, of course.
And the last piece though is kind of we kind of touch it basis because it's very easy to understand, which is real estate, right? There is these different strategies. There is one that is very popular, which they call it BRRRR, the BRRRR strategy, which is buy, rehab, rent, and refinance. So and then you start kind of repeating. So the same example that we were talking about the house over here. Um, so once that you already have it, instead of selling it, then you already fixed it, then you keep it. So in that way they start buying. It basically you start getting rent. But again, you have to make the numbers right, because let's say that this house, how much do you think that we can rent it? You say that this house is worth 250K. How much do you think that we can rent this house? Yeah, I think that you are spot on. I think that maybe 2K. So that means, and maybe how much do you think that we have to pay in mortgage and everything? Hmm. So, but that's pretty good because that means that you might be able to have like I don't know, between 200 to 500, yeah, exactly, cash flow. So, and cash flow is the king, right? So I really like businesses and assets that they start generating cash flow. So I'll share something with you. My I used to have some rentals. I still have some. But I was in some point I was thinking I was making that right like 200 to 500 bucks, and my wife was kind of like upset like why we are like spending so much time on this when like they are making almost no money, right? And before I didn't have a good uh, a good way to explain because even it was very instinctual for me. But now I can tell you that is the equity. Like literally what you're looking for is kind of that equity to be able to make that money. So fast forward that to after pandemic. a lot of these houses they just double in price, right? They were very very steady and slowly boom, it just double. So and that's where you make the money when it's just valuating in the equity as the interest rises, the government increases all of that, inflation, etc. That's where you make the money.
Yeah, because everything, like the cost of everything, started at going higher and higher due to the fact that moving it from one spot to another costs a lot. So then building a house goes higher. So for I see what do you mean there.
Yes, and
Definitely.
yeah, so that gives you an idea. So what questions do you have? I don't want to. It's a lot of information, right? That we just cover. What
Okay.
other questions do you have?
Honestly, what shocked me is the concept of just the trifecta. Yeah, the trifecta that you explained. And I've always been told that do not invest money unless you are armed with knowledge.
Yeah. Yeah, because
So
if not, you're gonna lose your shirt. So
yeah,
I'll tell you because a lot of people ask me, what do I do, right? So, and again, this is very personal. That's the reason why it's called personal finance, right? So what is working for me might not work for you, because it's just different personalities, right? And that's the hard part. It's like you understand this because you go to work out a lot. So you know that is like there are certain rules that you have to follow, right? And very very easy to understand, but it's hard to do, right? Like, well, if you eat less and then you eat all of your macros and then you're working out, you'll get muscle. Again, very simple concepts, but very hard to execute, right? And that's the reason why the majority of the people they might be obese, right? So similar here. Some of these concepts are easy to digest, harder to execute, but they're not impossible. So let me show you another thing. There is a I recommend you a couple books. One of those is The Richest Man of Babylon, and that's good. So there was a strategy there though that I really like it, and which basically it says um, from your money have a chunk to be able to have it in businesses, another one in real estate, and the other one is gold. And you have like these different sections, right? Like a 33, 33, 33. Um, Sometimes businesses, it could be your stock market and actually regular businesses, right? Then real estate is like it could be your home and all of that. And for me, I was doing gold, but then for the past 10 years, and I actually switched it to Bitcoin. So so now Bitcoin, because it has been growing so much, this actually is a bigger chunk of my portfolio, which I need to make sure that I'm rebalancing some point. But right now, I feel that it's in the cycle, uh, basically um, where Bitcoin might be able to rise. So, uh, but I wanted to show you like going back here on the uh, SPY also, like for this year, look at how much it did, right? If you only had it like in the S&P 500, it is 26%. So
oh
this
wow,
year, this year,
that is very good.
that's right, and you didn't have to do much, right? And you get another 26K. So I'm just showing to you like sometimes timing the market is better than actually trying to time the market. So, and I continue to say that because sometimes that is like crucial. Uh, and 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 even if we, this is the funny thing, right? But Bitcoin price, and again, if we go last year, it's 122%. So if you invested 100K in Bitcoin, and right now you will have like 222K, right? So it's just I'm showing you different investments that I actually executed, right? So again, this is not a financial advice, but you can start thinking, and that's the reason why I'm showing you this way of thinking. So that way you start comparing different things, because then maybe the bet that you can do is like, okay, you can get a chunk for this, and you can start putting in some of these investments. And we can go in other sessions. I can start explaining you about options, and I can start explaining you about futures and other more advanced techniques. But yeah, I wanted
Yeah,
to share that.
options is something that I would definitely want to know more, or because that's something that a common trade would do, and kind of like there is safe and risky bets that I have heard of, but always I want to know more because it's the knowledge. As I say, I'm yourself in knowledge, and you will do good. So yeah, options, please,
Yes. So there is this guy.
for the next session.
Um, there is this guy. I'm trying to remember his name. Um, I think that I found it. Okay. So let me just share this. Um, it's always important to remember that there is cycles for everything. Let me share again the screen. So there is this guy. His name is Benner, and he created this chart almost more than 100 years ago, in 1875. And basically, this little chart here predicted a lot of the cycles of the stock market. And basically, the way that you read it is that this almost looks like triangles, and it looks like how this thing actually works. Well, he basically said that these are the good years, and basically the time that people panic. And if you notice, it has matched very good, at least the last, even the pandemic. I have no idea how this thing was able uh, I mean, the pandemic was in 2020, right? So which is in this chunk, which is it was going down. So and right now we are in kind of this peak for the next 3 years up to 2026. I don't think that you have to follow these religious, but I feel that is like another a sign, which maybe next year might be an interesting year to be able to invest, but then pay attention because there might be something happen in between 26, 27. So then I feel that that's when you have to have also some liquid cash because there's gonna be good opportunities, and it's gonna last a while until this bigger cycle. But yeah, it's also important to remember that all of this is they have cycles.
Okay, yeah, makes sense. So another question that I would have is, where
Mhm.
can I get the chart? Because there's a lot of information that has been compact into a session, and I
Yeah,
have to collapse everything and then come back
I'm gonna
and
post
ask.
this on the channel, and I'll put there as well the presentations, and that way you can get it. So in that way, and obviously
Okay.
you can contact me or ask me any questions. But yeah, this was fun.
Oh yeah, absolutely. Walked away with a lot of knowledge. So
All right,
thank you. Honestly,
no problem.
thank you very much.